Hi, good afternoon, everyone. Thanks so much for joining us. My name is Alicia Field. I'm the Director of Events with the Greater Reston Chamber of Commerce, and I'd like to welcome you to today's Business Success webinar, Financial Advice for Yourself, Your Business, and Details on the SBA Loans. And before we get started, I'm just going to share my screen here. I'd quickly like to recognize our sponsors. And you will see them here. So here are our strategic sponsors. Here are our visionary sponsors. And here are advocate sponsors. So thank you so much to all of them who do so much to support us throughout the year. We really appreciate it. Also, before we get started, just a few housekeeping notes. Please feel free to comment in the chat box. So you can click on your screen, you'll see a little chat box. You can feel free to chat and make comments or sort of talk amongst yourselves. However, any questions that you have, please click on the Q&A box, because otherwise the chat may go so fast that we lose those questions. So we might want to make sure that we see them. So again, please click on the Q&A box to put all questions in there. And at the end of the event, the end of the webinar, we'll certainly get to as many of them as we can. Also, lastly, this webinar is being recorded. So afterwards, I'll go ahead and email everyone who participated, and I'll send them a recording to the link, as well as any of the PowerPoints as well, if we can go ahead and share those. Well, now on to our esteemed panelists. We're so pleased to have Dee Kakar and Diana Villanueva from M&T Bank to discuss commercial finance. We also have John Yankee from FJY Financial, and he's going to give us some personal advice on personal finance. We also have David Hincapie from the U.S. Small Business Administration, who's going to help us navigate the SBA loans. So with that, thank you all for joining us, and we're going to go ahead and start with Dee and Diana.
Good afternoon, everyone, and thank you again. As mentioned, I'm Diana Villanueva with Business Banking Team of M&T Bank. And can you hear me? Okay. And joining me is Dee Kakar, one of our business banking team leaders. First of all, a huge thank you to each of you for being with us today. Time is always sensitive as small business owners, and now time is more sensitive than ever. It is truly our job as business leaders to make difficult decisions, and many of you today are making decisions you never imagined. The information we will share today hopefully helps many of you as we move through this unprecedented time. As a relationship manager, I am here to help our clients, and it is important that business owners have a relationship manager that they stay close to. We are credit trained and understand financials to help and give client advice during times like these. At M&T, we have been very proactive reaching out to our clients and providing as much information as we get on a daily basis from different sources, including SBA. We have done a couple of things to help our clients, and that includes 3-month deferments on loans and lines of credit. We've provided additional working capital in forms of doing lines of credit or increasing lines of credit, and then definitely coming up with different creative ways to help our clients. We are hyper-focused on our existing clients, and all of our resources at this time are going towards helping them. These options are available at other financial institutions as well, and we encourage each and every one of you to reach out to your relationship manager at the institution you bank with. I did provide some information around the CARES Act and both programs, the Economic Injury Disaster Loan, EIDL, and the Paycheck Protection Program, the PPP, to be shared with everyone after this. And I'm sure David with SBA will have additional information. Something to keep in mind is that the EIDL is the loan that you will be applying for directly through SBA, and the PPP one is the one that your financial institution will be helping you with. We encourage business owners to apply with their bank where they already have a relationship with, to expedite the process. Now, thank you, and I hope you and your families are safe during these times, and I will turn it over back to Carrie or John.
Great, thank you so much, Diana. Dee, did you have anything to add, or are we ready to move on to John?
Sure, I can go. Can you hear me?
Yes, okay. Wonderful.
Perfect.
Thank you, John.
Yeah, as Diana said, we're very, we want to be there for our clients. We want to show up for our clients. So we've proactively been reaching out to our clients. I know all financial institutions have shown the dedication and care, and it's a truly amazing thing to see as we fight in this weird environment. Like Diana said, we are hypersensitive to our clients. We are proactively reaching out to them. We are doing whatever we can to make sure that their businesses will survive this and sustain this through heroic acts from the SBA, from the banks proactively removing fees, deferring loan payments, increasing lines of credits. We will get through all of this. We are happy to represent or answer any questions that any small business owner may have. Like Diana said, we encourage you to go to the financial institution that you have an operating account with, as 100% of our resources are dedicated to our clients. We estimated at M&T Bank to have over 100,000 loan applications in a 2-month period, where in a typical year we get 8,000 for the whole entire year. So as you can imagine, capacity is going to be taxed, and we're going to be going through a lot of time and to be able to help our clients. I'm sure the SBA will go into all the different CARES Acts and EIDL that's available to them. At M&T, we are launching our CARES Act on Monday. I think some banks have launched today, but we're truly going to make an online portal and try to keep everything centralized so that we can be as efficient and diligent as possible to our clients. And with that, I will be happy to take any questions if there are any.
Okay, thank you so much, Dee. We're actually going to save questions for the end. But if you don't have anything else, I'm actually going to hand over the mic to John Yankee with FJY Financial to share some advice on personal finance.
Hello, thanks for having me today. I hope everyone is happy that it's Friday, although I guess probably a lot of the days are starting to run together. So I will talk a little bit about some concepts relating to investments and some of the issues we're talking with our clients, and certainly happy to take questions at the end. I was asked to sort of give a sense of what we're doing right now, talking to people about investments and everything. And so next, if you go to the first slide, most of you have probably seen something like this. And what we're seeing right now is a time when people are basically being driven by their emotions. And we've been in a state of optimism / elation for quite a while, 11 years, the longest bull market in history. And by late February, we were probably hitting the nervousness place, and now we're in the fear place. And we've been probably moving back and forth on the circular part, going back between nervousness and optimism, but certainly hedging closer to fear than anything else. And so what's important to realize during these times when your emotions are sort of getting the best of you are a few things that I'm going to sort of relate to you in the next few slides. If you want to go to the next one. We are, many of us and most of us, I would say, are swayed by what we call the frame of reference. The media, and this isn't a slam against the media at all. The media talks about things to get clicks and to sell papers and all of this other stuff. And so they give headlines that sometimes are intended to draw your emotions to the articles. And what you see on this slide, of course, are some of the famous headlines over the years that if you had followed sort of the advice that maybe the headline would imply, you might have made some really bad decisions. And if you go to the next slide, you see yeah, that's good. You see what ends up happening. And this is, if any of y'all are looking for some great resources, a guy named Carl Richards runs a company called Behavior Gap, and he does basically back of the envelope types of drawings for putting complicated concepts into simple drawings. And this is really one that is fascinating, because what the investment return is on the left side is basically what the markets give you. The markets give you an investment return if you stay in the markets. But what most investors get is much lower than what the investment return traditionally is. And that difference we call the behavior gap. That's where emotions come in. And sometimes people say, well, that's easy to say, but really, I mean, can you really back that up? And if you go to the next slide, you actually see there are statistics that back that up. The left side, the blue bar, is actually what the market returns are over the trailing 10-year period, the trailing 20-year period, and the trailing 30-year period. And the green bar is actually what investors, when you average all investors up, what they got. There is a behavior gap that when you are being driven by your emotions, it actually ends up statistically hurting your returns. Now, that isn't to say that there aren't people out there who can theoretically make decisions that improve their investment return over time. But what the statistics show is that there are a handful of people out of the millions and millions of people out there. And so if I were you, I wouldn't bet your lot on someone saying that they can do better than the market, but rather maybe you should just try to get that investment return of the market. If you go to the next slide, what you see is basically the impact of people who do try to time the markets is. You see on the far left bar, the growth of $1,000 if you stayed invested over the last 30 years. Just stay invested every single day. If through timing the market or trying to make a guess or predict what the future holds, you missed the best day or missed the 5 best days, or even just the 15 best days. Remember, this is 30 years times 365 days is a whole lot of days. If because of your timing of the markets, you miss just a couple of the best days, you significantly decrease that return of your overall portfolio. That's what you're trying to avoid from our perspective. And next slide. What you end up seeing is over long periods of time, this is the last 90 years. The blue is when markets are going up and the red is when markets are going down. And look at that. There's a whole lot of blue there. Now, we are, the period, the 1 month period that we're in is not reflected on this chart. The little red negative on the far right is basically the fourth quarter of last year, December of 2018. And you see that we've only gone up a little bit since then. But if you try to time the markets, look at how significant those increases are immediately following the red downs. It's basically when you have the worst period, when you've fallen into that fear, you end up, and you succumb to that fear and get out of the market, you end up missing a significant part of the return or the rebound. And so what we're talking with clients about right now is the fact that while this is certainly this coronavirus and the medical situation that's impacting the economic situation is certainly nothing to sneeze at or to, no pun intended, but it's nothing to discount. It's very scary for all of us. But when you look at it, if you're a long-term investor, what's most important is to try to take the emotions out of that investing and stick to to your long-term investment strategy. Next slide. This slide just here is just intended to show you over the last 30 years, some of the different crises that we've had where emotion has gotten the best of a lot of people. And what you see is that return, each of these different bars are the return that you get in the markets had you stayed invested over the next 3 years or the next 5 years after these different crises. And so it's certainly important. Again, our job as advisors many times during crises like this are just to talk clients out of making bad decisions that are driven by emotions. What you're supposed to do in markets like this is actually something that's really hard to stomach. If you see the next slide, the concept of rebalancing. We are talking clients out of being emotional. Can we go to the next slide? Yes. Rebalancing means you're actually doing something that's counterintuitive. What we've seen right now is sort of the opposite of what this slide shows. But if you have a 60-40 portfolio right now, and the stock market has dropped as much as it has, we are actually telling clients they've gone from 60-40 to maybe 55% equity or 50% equity instead of the 60 that was their target. And so we're telling them to trim or sell from their fixed income, from their bond positions, and add to stocks right now. And yes, that is what's really scary and hard for a lot of people to stomach, is the concept that they should be buying more stocks right now. That is what good advisors are telling their clients to be doing right now, but emotionally, really hard to do. So next slide. So what we like to do, again, you see a nice, good drawing from Behavior Gap, which sums up what we think you should really focus on. Focus on the things that you can control. You can't control the markets. You're not going to be able to time the markets, but you can control other things like having an investment plan that's strong, having good diversification, lowering your expenses and your taxes, and then most importantly, maybe staying disciplined when you have these market dips and market plunges. Staying away from your emotion. And I would argue, and of course this is a self-serving comment, but if you go to the next slide, having someone to talk through decisions with. Again, an interesting drawing. That doesn't mean that everyone makes big mistakes if you don't have an advisor, but a lot of times an advisor is a partner who's on your side and who is there to talk you off the ledge. I've talked a couple of clients off of the ledge. But interestingly, because we've educated our clients over the years, we haven't had as many phone calls as you might imagine during this last month. And it's because clients understand that they're long-term investors and that you're not supposed to be making investment decisions based on emotion. So I'm going to sort of stop there. The next slide has our information about us. I'm sure you can get it from the Chamber of Commerce, but happy to answer any questions at the end. It's a scary time right now, but it's also I believe not the end of the world, and so therefore you should become a long-term investor and try to stick this out. Thanks for your time.
Great, thank you so much, John. Definitely appreciate it. I'm going to stop sharing here, and David, I'll hand it over to you.
Okay, so I got my sound live, and now I gotta go to the thing where I share the screen. Let's get this PowerPoint up. There it is. Share. All right, make a slideshow. All right, here we go. So I'm going to go through this very quickly because there's always going to be questions no matter what. So on the left here, you see our SBA administrator. She's been around for about 2 months. She's relatively new on the job for us, but she's already made some changes to our SOPs regarding lending, specifically in economic injury disaster loans, to make it easier for small businesses to benefit from that. And on the right is our district director for the Washington Metropolitan Area District Office. And he's our leader here in the local district office. How do I make this go forward? There we go. All right, so here are the financial tools and resources available to help small business. We got loan payment deferrals to augment cash flow, the CARES Act, Paycheck Protection Program that everybody wants to know about, economic injury disaster loan, small business debt relief, express bridge loans, loan application support, and entrepreneurial mentoring and coaching support. These are the 7 things that we're going to go over. All right, loan payment deferrals to augment cash flow. So if you have a loan right now with the SBA, you're going to already an SBA loan, you're going to get an automatic deferral on payments to that loan. So that should be able to increase your cash flow if you're still open and your revenues are down, because we know some businesses aren't open at all. But that can certainly help you. And you can also ask for loan deferrals from for any of your other loans. And in something very unusual has happened because of the magnitude of this emergency, federal and state banking regulatory agencies have told financial institutions that it's okay for them to give loan modifications and deferrals to borrowers they have, small business borrowers. And this is a very good thing because usually banks don't want to do too many of these modifications because it makes their portfolio look less good, look bad. And then the regulatory agencies can take action against them. So what the regulatory agencies have said is, it's okay, we understand there's an emergency. You can do these loan modifications, defer payments and everything, and it won't affect your standing with regulators. And those deferments don't reflect negatively on the borrower's credit score either. So this is going to help small businesses increase a little bit of cash flow by not having to make payments. Next thing, existing SBA loans. So here are the ones that I mentioned first, actually, I jumped ahead. So if you have a 7A, 504, or an SBA microloan, you can get your payments deferred up to 6 months. And you have to talk to your lenders and get the loan modification. If you have an economic injury disaster loan already for some previous disaster, we're automatically deferring payments on all those loans until December 31st. If you have non-SBA business loans, discuss them with your bank or lender and see about getting some help from them that way. Now, the Paycheck Protection Program. Okay. These are not direct loans from the SBA. They come from the SBA 7A lenders, federal credit unions, and there's a couple of other kinds of institutions. They're listed on the website. Different types of institutions that are eligible to do this. The loan is going to be processed through these banks and financial institutions. We're giving a 100% guarantee to the lenders so that if there's a default, then we will pay the lenders for the loan. Existing SBA lenders will provide these loans, and we will not charge, the lenders will not charge any loan fees for the PPP loans. So that's specifically in the regulations that they can't charge any fees. CARES Act, Paycheck Protection Program. So the maximum loan you can get is $10 million. This is for small businesses. You have to have fewer than 500 employees, or for certain NAICS codes, the size standards is not by employees, it's by revenue, right? The revenue of the business. But you have to be an SBA small business within the SBA small business size standards. Maximum loan, $10 million. The interest rate is 1%. The loan forgiveness, that's tied to the use of funds for payroll costs. You must use a loan for payroll costs only. Now, payroll costs is not just pay, not just like wages, commissions, and salaries. There are certain things included in payroll costs, like family medical leave, vacation leave, sick leave, employee health benefits, premiums, severance pay, and also taxes that are assessed on employee compensation by a state or by a county. So you could say state or county payroll taxes, not just federal pay. You could, all those things count as payroll costs. Now, if you use the PPP for those payroll costs, that means the salaries, commissions, wages, and the things I mentioned, then you can get the loan forgiven. There's no loan fees, there's no collateral required, there's no personal guarantees. The maturity is 2 years. The first payment is deferred for 6 months. So if you get the loan on, say, May 15th, but funds are dispersed, you won't have to make your first payment until, what would that be, November 15th, okay? How to apply? You go through an SBA lender, 7A lender, or through any federally insured depository institution, a federally insured credit union, or farm credit system institution that is participating. Other regulated lenders will be available to make these loans once they're approved and enrolled in the program. And you can consult with another regulated lender if you wish to see if they're participating. So all loans have the same terms regardless of the lender or the borrower. It's all the same loan, whether you get it at Bank of America or a credit union or whatever, it's all the same terms, right? Now, the economic injury disaster loan, that's different. And I know I'm going fast, but I know that you're going to have questions, and it'll be better if we get to the questions quickly. So economic injury disaster loan, this is a direct loan program from the SBA. It's not from banks or credit unions or farm credit system or anything like that. It's a direct SBA loan. The EIDL program has existed for many years before this emergency happened, right? It was already in existence, but there were some changes made to it with the legislation, additions with the legislation from last weekend. Okay, so small businesses, again, within the SBA size standards. Who's eligible? Small agricultural cooperatives and aquaculture businesses. Private nonprofit organizations, regardless of size. A private nonprofit means a nonprofit that is not a government nonprofit. So a state hospital, a county hospital, a state college, all those sorts of things are nonprofits, but they're government nonprofits. So as long as you're a private nonprofit organization, regardless of size, you can qualify for an EIDL. Now, these organizations are ineligible to receive an EIDL. Religious organizations, charitable organizations, and gambling concerns. In other words, businesses that derive more than 1/3 of their annual gross revenue from legal gambling activities. Even if they're legal, if they derive more than 1/3 from legal gambling, they're not eligible. How much can I borrow? You can borrow up to $2 million. Doesn't mean you'll get $2 million. I'll get to that in a moment, but up to the maximum possible loan is $2 million. The first $10,000 of which, or up to $10,000, will take the form of a loan advance, and we'll forgive that entirely. So it's just a loan advance you get that we forgive it entirely. Up to $10,000, not necessarily $10,000. Interest rates on this disaster loan are 3.75 for small businesses and 2.75% for nonprofits. The terms are up to 30 years and are available, and the first payment is deferred 12 months after the loan is issued. So the first payment is deferred for 12 months. The interest will begin accruing during those 12 months, but the first payment is not due for 12 months. What can you use them for? These are working capital loans, and you can use them to pay fixed debts, to pay payroll, accounts payable, and other bills that could have been paid if the disaster had not occurred. All right, so these disaster loans do not replace profits. These disaster loans cannot be used to expand the business. If you're planning on buying new plant or equipment, it's not for that. This is working capital to pay these fixed debts, payroll, accounts payable, notes payable, loans payable, a mortgage that the business had, for example, if it was buying the property in which the business is located. That's what this is for. 6 months of working capital. We will calculate the amount of the loan based on the financial information that you give us. So you don't request a specific amount. We will calculate it, and then that's the loan that we're going to offer you. Okay. Now, notice this says payroll. We cannot duplicate benefits. So if you get both, you can apply for both this one and the other one. If you get both, you should use this one for stuff that's not payroll and get the other one to use for payroll. All right. All right. So general loan approval criteria. So first thing we're going to look at is credit history. Make sure that it's acceptable to the SBA. We don't have a fixed number for what the credit score has to be, but we want to look at it and see if it's okay. After that, we're going to look at repayment ability. These loans are not based on collateral. These loans are based on the cash flow of the business. We're not going to base it on your cash flow now because we know everybody's cash flow is reduced. These are based on 12 months before the emergency. What is your normal cash flow? What is your normal needs for working capital before the emergency? And it's going to be for 6 months of that. So the repayment ability is very important in this. We got to determine that based on the previous 12 months before the emergency, you showed enough cash flow that you could repay this loan. Now recall, the loan is also a very long-term loan with a very low interest rate. It's 3.75%, and it's up to 30 years. Very often they're more than 25 years. So the applicant business has to be in an area that's a disaster designated area, but right now that's every county in every state and territory in the United States. Collateral requirements. So these are not collateral loans. Any loan under 25,000 or 25,000 and under is not going to require collateral. It's just on your signature. Loans over 25,000, if collateral is available, you have to be willing to pledge it. So if you have real estate, you have to be willing to take a lien on it. It doesn't matter if we're the fifth or sixth person on, position on that lien. It doesn't matter. You have to be willing to take a lien on it. We will not decline a loan for lack of collateral, but we require you to pledge whatever you have available as collateral. Now, unlike the 7A and 504 loans, they're not initiated through the banks. They're done by us directly. I said that at the beginning, so this is redundant here. You go online and you apply online. Now, the debt relief program. Okay, this is immediate relief to small businesses with non-disaster SBA loans, in particular 7A, 504, and microloans. For the first 6 months, we will cover all loan payments, including principal, interest, fees, all covered for the first 6 months if you already have one of these loans. This relief will also be available to new borrowers who take out loans by September 27 of this year. The express bridge loans. So if you have a loan, a relationship with a current SBA Express lender, you can get $25,000. That's if you already have a loan from an SBA Express lender. You can get a $25,000 bridge loan. It can be used as short-term funding to bridge the gap while you apply for the EIDL, because it's going to take about 30 days to get an EIDL loan decision. So that means this can happen more quickly. You can get $25,000 while you're waiting for the loan decision from the other one. Repayment in full or partially via the SBA disaster loan. So you can get this bridge loan very quickly if you already have a relationship with an SBA Express lender, $25,000. Then when you get the loan decision on the EIDL and you get that loan, you can use that money to pay back this $25,000 right away. All right. Now, so this is the Disaster Customer Service Center. It's now open 24/7. I actually called it very late last night at 11:30, and it was relatively easy to get through. I imagine it's probably very easy to get through at 2 or 2:30 in the morning. You should give it a shot if you have an urgent question. You can email them at disastercustomerservice@sba.gov. Word of advice for emailing. If you email them for customer service, it's actually very good, but you have to be very specific, very clear about what you're asking. We get a lot of emails. Surprise, surprise, we get a lot of emails that we can't even figure out what people are saying to us. And I don't mean to talk down to everybody, but this is a point where you got to go back to 6th grade, complete sentences. I'm not kidding. Complete sentences so that we know what you're asking us. Because right now, they're getting emails from across the country. We're supposed to get, actually, I didn't memorize it, but I can tell you right now, the number of PPP loans already applied for, what did it say? I think his number said 9,550 something already. That's the updated numbers we got from our head of Office of Field Operations. Already. So you can imagine the volume of questions that people are getting. So make your question clear, concise, specific, and they'll be able to help you. Deaf and hard of hearing customers can contact the 800 number you see there. And you can also talk to our network of resource partners. These are the small business development centers, women's business centers, the SCORE mentors, and the veterans business outreach centers. All of those are SBA resource partners because they are partially funded by us, the SBA. Here's a list of how to find them in the Washington Metropolitan Area District Office area of operations. There's SCORE. To find a SCORE mentor near you, just go to score.org or, here, Washington, D.C., score.org. SBDCs, we have the DC SBDC, the Maryland SBDC, and the Virginia SBDCs, and they have different locations in each of those states, so more than one location. The Women's Business Center, same thing, DC WBC, Maryland WBC, and CBP Online is the one for Virginia. CBP Online, Community Business Partnership, they're the ones. Veteran Business Outreach Center, we have one that covers quite a large area, but they're here in Virginia, in Springfield. You can reach them at this number. All right, now, if you want to keep up with us, what's going on in the announcement from us and real-time updates, go to this website, sba.gov/updates. When you get there, you put in your zip code, and then you'll get updates from the WMATO office. For detailed information on all SBA programs, these are the websites, and just go to our SBA website right now. Up at the top, there's going to be a yellow banner, like a caution or warning tape, little triangle with the exclamation mark. You click on that, and it's got all the COVID-19 related stuff. All right, that's it for now. Let's take questions.
All right, wonderful, David. Thank you so much. All right, we'll keep the questions coming in. The first one is, are we able to share that presentation, or is it something that we should look at on the replay?
Looking at it on the replay.
Okay. All right. Sounds good. Thank you. Now let's see here. Going through them.
But there's nothing in there that you're not going to get from the SBA website. And so now the audience is not going to know this, but Alicia, as I told you yesterday, I got this 40 minutes before starting the presentation because it was updated. So many things are changing. So it's actually not worth anybody's time to go to a replay and look at it again. The most up-to-date information is going to be on our website. Just don't even worry about this. Everything that I gave you is going to be on our website.
Okay, perfect.
Right?
Great.
Yeah.
Wonderful to know. Thank you
And
so
there
much.
will be changes. We'll probably have another one by either the end of the day today. Our public affairs guys working hard, and we'll probably have yet another one by mid-morning on Monday because there will be things updated and changing.
Right. Okay. Okay. Great. Thank you. So that's great. The website will be constantly updated. All right. So one question we have is time of the essence in regarding starting an application.
Yes. I already told you there's 9,555 applications in already for the PPP. We've had nearly what was the latest number was nearly 1 million applications for the EIDL. Don't waste time when you I mean, I almost want to tell you just hang up on me right now and go apply. But let's stick around to the end and then go apply.
Right, that makes sense. Thank you. So it sounds like there's not necessarily a capped amount of money that the government will give out, but they will.
Well, there is. There's $349 billion for that PPP.
Right. Okay. Thank you. So it will be on a first come, first served basis. So
yes, first come, first served basis. And it says it right there. If you go to our website and get the information on the PPP, at the bottom there's a link to look at the interim rules, the rules governing it, right? So the rules are already published. They're already on the website, and it tells you right there, it's first come, first served.
Right. Okay, great. Thank you. Let's see, we've got that one. Let's see. Will troubled debt restructure loan, TDR, be carried on the bank's balance sheet under these circumstances?
I have no idea what they're talking about.
Okay.
Troubled debt, I don't know why they're asking me a question about what's going to be carried on a bank's balance sheet.
Okay. All right. We will go beyond
what are they talking about? I don't know. I'm talking about the SBA's EIDL and Paycheck Protection Program loans.
Gotcha. Let's see. Okay. So this one is a little bit loaded. So I'll sort of read the whole thing first. Will the EIDL 10,000 be forgiven if you use it for repaying of obligations that cannot be met due to revenue loss, but even if you get the PPP loan?
Yes. The 10,000 advance is forgiven, period.
Okay, great.
Now, if you apply for the PPP, if you do the EIDL and then apply for the PPP, the 10,000 will reduce the amount of PPP by 10,000.
Okay, great.
And they just take it off the PPP.
All right. What if some of your employees are no longer available to work? Can you hire new people?
Well, the whole point of this is that so you can pay people who can't work. Why aren't they available to work is the question. All right, so here, let me back up a moment. Here's the situation all these small business owners find them in. On the one hand, our government is saying, stay home. Everyone, customers, employees, everyone, stay home, unless it's super essential. Okay, so that means their revenues are down. They can't pay their employees. So their employees stay home. So if you have no revenues, how do you pay these employees? Well, that's what the PPP for, so you can pay those employees. If they have to stay home, that's fine. You can pay them because they have to stay home. See, the thing is, on the one hand, we're telling everybody, I'll say we, the government, right? Our government is telling us we all have to stay home for safety. But then now we don't have revenue. So how do we pay these people? Okay, that's what the PPP is for. Now, if your revenues are down, but your people are still coming into work, and you don't have enough money to pay everyone, well, then that's what the PPP is for as well. A lot of people are not quite understanding that the PPP can be used to pay people who are still staying at home. That's fine. That's not a problem. The important thing is that you keep them on the payroll. Keep them on the payroll and the loan will be forgiven. I'll say it again. Keep them on the payroll and the loan will be forgiven. That's the purpose. Because right now your revenues are either down or zero. Is that clear?
I think that makes sense. Thank
All
you.
right.
So I know we already talked about submit your application ASAP. So there's a question, what documentation should they begin to gather while they're waiting to hear back?
So the documentation is going to be gathered for the PPP is going to be gathered by the banks because they have certain underwriting requirements that are required in the rules. You can look up the rules, like I said, right on the website. You can download that PDF. It's there. It's 31 pages. It's actually kind of short for SBA rules, but that's because, you know, they wrote them and published them in 5 days. So, all right. For the EIDL, that's actually very streamlined. You don't need a whole lot of financial documentation, but you're going to need the information. You're not going to have to submit it to us. We may ask for more information later, but to get your application in, it's a streamlined application and you're going to be able to do it pretty quickly. All right. Now, the banks, when they get the payroll information, right, to see what your loan is going to be, how much the loan has to be, they're going to want whatever payroll information that you have. So this is going to, you know, whatever tax information, everything you have from, you know, your payroll taxes that you're paying, the records of who your employees are, how often they work, because you might have salaried people, you might have hourly people, and the hourly people we're going to do an average. And then that's the amount of the loan.
Right. Okay, great. Thank you. And someone is asking if there's a list of what can be included in the payroll costs. So there's
Yes,
a few here.
That's right in the instructions on the PDF.
Okay, fabulous. Thank you. So we've got several here. They were saying
It's in the interim rule.
yep, FICA, management fees. But would utilities and rent, are they included?
You can use a PPP for that, but that doesn't count as payroll. Like I said, there are things that you can use a PPP for that does not count as payroll. And remember, and it says it all there, as long as you use 75% of the PPP for payroll, you will have the loan forgiven.
Okay, let's see. And then someone said they did apply earlier in the week, maybe on Sunday. Do we have a time? Do we know kind of when they'll be answered? They said they maybe heard 3 days. Do you have any idea if that's correct?
No, for the EIDL, because that's the only thing they could have applied for. So
Right.
if they apply, no, it's going to be, our normal loan decision time is 18 to 21 days, but that's before all this. That's when, you know, we might have like 3 disasters in 3 different places in the country, right? A tornado, a fire in California, and a flood somewhere in the Mississippi Valley, right? So loan decisions, because at any given time, there's maybe a few disasters in the country. So loan decision time is like 21 days. Now, it's more like 28 to 32 days. So that's the loan decision time.
Okay, very good, very good. And someone is asking, what 12-month period are we using to determine the monthly average payroll?
The 12 months before the disaster.
Okay, previous. Got it. Thank you. So we have a small business owner with contract staff. Should they apply for the PPP?
You mean 1099, independent contractors?
They don't say, but yeah, I would assume so.
Okay. So no, because the contractors are not on the payroll, but independent contractors can apply for their own EIDL.
Okay, they can apply for their own. Very good.
Mhm.
Okay, yep, that one too. That was several people were asking that. Thank you.
And the independent contractors, if they have employees, because that could happen too,
Mm-hmm.
right? But so the independent contractors can apply for their own PPP if they have employees, not other contractors, and the contractors themselves can apply for an EIDL.
Great, great. This is an interesting one too. If your employees have already filed for unemployment, can you apply for them?
Well, yeah, but you got to rehire them
Mm-hmm.
because in the PPP rules, it says you have to rehire them quickly.
Okay. So if they've already filed for unemployment, we've laid them off, whatever, so
Right.
that they could collect unemployment, we'll go back, rehire them so that we can.
Yeah, and then they're not collecting unemployment and you're using the PPP to pay their regular wages or salary. Because their unemployment is not going to be as much, right?
Mm-hmm.
As what they're, because presumably with the PPP, what you're going to be able to do is pay them what you normally paid them. But if they go on unemployment, they're not going to be able to get as much as they normally got. So then when the PPP is over after 8 weeks, then if there is no new program, if there's no new money or whatever, then they can be laid off again, and then they can go apply for unemployment.
Okay.
Follow me?
Yes. Yes.
But if we're lucky and everything reopens sometime in the 8 weeks, or sometime at the end of the 8 weeks or shortly after, then this way you don't have any of the problems of rehiring people. They're already on the payroll, even if they weren't working and you were using the PPP to pay their normal wages and salaries. Because they're on the payroll, as long as you don't reduce your payroll, right, you will have the loan forgiven.
Okay, great. Thank you. So that goes, as long as they're on the payroll, that goes for full-timers and part-timers?
Yes.
Okay.
You cannot reduce the number of employees. As long as you don't reduce the number of employees, you have the loan forgiven. The way you have to think about this, it's not made very clear, is the government is gonna cover your payroll for these 8 weeks. We are calling it a loan, but as long as you meet these conditions, the loan's forgiven. So your government is gonna cover your payroll for these 8 weeks. Why? Because it's a crazy, intense emergency.
Okay, great. Thank you. So this is an interesting one. We're self-employed and do not draw a salary. Can we apply for the PPP loan? What number should we put in the average now? Because they're not.
No, you don't have employees, but you can
Right.
apply for an EIDL.
Okay, perfect. So EIDL, not PPP.
Mhm.
Yep. So it's, yeah, we talked about that. The EIDL decisions are taking 30 days. Who is eligible again for the 25,000 bridge loan?
If you already have an express loan with an SBA lender.
Okay, great. Thank you. Let's see. How long do you have to pay employees to be forgiven once you receive the loan? What happens if you pay them for 8 weeks? Have to close your doors?
As long as you have them employed for those 8 weeks, the loan will be forgiven. It says it all right there in the explanations on the website. You go there, you read it there, it tells you everything there. Keep them employed, even if they're not working, even if they're not coming into work because your business is shut down. Maybe you have a gym. Like I talked to a business owner this morning. She has 28 employees. She has a gymnastics gym. The governor of Virginia said, you got to be shut down. But she can use a PPP to pay all those people, even if they have to stay home. As long as she keeps them on the payroll for those 8 weeks, the loan is forgiven.
Okay, great. And then another question, would applying for the EIDL have any impact on the PPP application?
No, you can apply for both.
Perfect. We talked about how long it takes. Okay, so the SBA will not ask for additional documents after you apply through for an EIDL through the streamlined process?
They might. We might. So if the loan is above a certain threshold, if we calculate that your 6 months of working capital is more than 300,000, we're going to ask for more financial information.
Okay, very good to know. So just try to have everything under the sun ready to go.
Yeah, just get yourself ready as if you're going for any loan, right? So what happens when you go for any kind of business loan? Whoever's going to lend you the money is going to get up in your business. We're going to want everything. 3 months of financials, the personal financial statement, all that stuff. So get it ready. If you think your working capital loan is going to be more than 300,000.
Right, let's see. Okay, we answered that. If they're 1099s, it doesn't apply to the PPP. Are partners in an S Corp included in the average salary calculation? They receive management fees, not monthly salary payments. They're
not on salary. They're not W-2 employees.
It looks not there.
No, it doesn't qualify. They have to be W-2 employees. So this can happen, right? You have an S corporation, and you might have owners of the S corporation who are on salary for something, and obviously, as owners of the corporations, let's say there's 3 shareholders, they also get these distributions. The PPP doesn't cover distributions because that's the profits. But the PPP will cover salary. And of course, they're going to have to prove that they were on salary. This has already happened. Last week, God, it feels like last year. Last week, people were asking me questions. What if I don't have the records that I was paying myself a salary. Oh, well, it sounds to me like you're an S corporation owner who was calling it a salary, but you weren't paying payroll taxes on it.
Mhm.
You don't have the proof that it's a salary, a W-2. Then all you were doing was taking distributions and you just got caught, right? So
Right.
if the S corporation owners are salaried employees as well, and they're W-2 employees and they have all the documentation to back up that they've been paying all the necessary taxes on that payroll, fine, you can cover that payroll, but you can't cover the other stuff. That's the profits, and you can't use it for that.
Okay, great. And I know you covered this. The PPP is available through obviously several banks and credit unions, et cetera. And I think, again, this is a situation where maybe you just have to talk to your own bank because they're saying some banks are not allowing non-banking clients to apply. So I guess that's probably just case by case basis and not a blanket statement.
Yeah, I had that phone call earlier, just before this as well. Somebody said, "Hey, the guy at the Bank of America told me that we don't qualify because I said, look, every business qualifies that meets these conditions, right? That I set out earlier. You qualify. That's not our rule. That maybe that bank has that rule, but that's not our rule. So you can go to another bank that has it, that maybe doesn't have that rule." I have a feeling we're going to run into, because this just started, 6 hours ago. So I have a feeling we're going to start running into a lot of business owners who say, I can't get it because I don't have a banking relationship with this bank and they won't do it for me. Then you should go to whoever you have a banking relationship with.
Let me respond to that real quick, if I may.
Mm-hmm.
It's not, there's two issues at fact that the SBA has to look at. One is a capacity issue. So like I said earlier, we're going to go from 8,000 SBA loans a year to, we estimate in a 2-month period, 100,000. The second is the government has very strict know your customer laws in place. So if a non-customer comes to the bank, there's going to be some things that we'll have to do over and above. So we don't believe that we have enough capacity to be able to help all our clients. So to bring someone that is not a client to the bank, it just makes it tough. I'm not going to say it's impossible, but it just makes it tougher. And like I said earlier, like Diana said earlier, we're 100% hyper focused on our clients that are going through this.
Okay, great. Thank you, Dee. Does PPP cover guaranteed payments for LLCs?
What do they mean?
That was the limited information. Feel
I
free.
don't know what they mean by guaranteed
Add
payment.
to that, Elizabeth. Sorry, that's all we have. But Elizabeth, feel free to put more.
So LLC it's similar to the S corporation. Look, in the LLC, you have these partners, right? And the partners may be paying themselves a salary. They may be salaried W-2 employees, but then they also get their distributions. It does not cover distributions. Distributions are profits. The EIDL is not to substitute your profits. The EIDL is working capital to keep the business open so that you can pay your fixed obligations, including payroll.
Right. Okay. Thank you. So it looks like we're getting down to 4 minutes or so. We've got a few more, certainly, of course, for you, David. But if anyone else has any for Dee or John, certainly put those in as well, so we can make sure to address them before the end here.
Yeah, I just wanted to say one thing as someone who's been advising clients about the PPP in terms of looking into it. We've done our own research. I just want to give David a lot of credit. Great questions answered, but in David's defense, a lot of this stuff is available if you just go to the website or go to the Chamber of Commerce has information. Probably 90% of the questions asked today, I was able to think, oh, I know the answer to that because I've read all of this stuff on behalf of my clients. So David, great job answering them. What a great resource. And so I appreciate your time today.
You're welcome. I mean, that's what they pay me to do, so.
No, we certainly appreciate it. Yes, we're getting lots and lots of chatter. Thank you so much, David. Everyone certainly appreciates this. This is awesome. Sorry, they're coming in fast and furious.
So let's do one more because I actually got to get ready for the next one of these that I have to do with another organization.
Okay, sure. So are there other, let's see, if I don't get the PPP loan because of lack of funds, are there other options to keep paying staff?
There might be from states. I heard that Maryland, the state of Maryland, I know that Maryland has one program if you're in Maryland, but this is Virginia, so you might not be. I don't know if Virginia does. I haven't heard about that. But there's $349 billion that was allotted to this. So get on it. I mean, I don't know why you would wait. Like, I mean, like, how long are you planning on waiting for the rest of the country to use up $349 billion? It's not a lot when you consider the number of people who are going to be applying, but I don't know what they're planning on doing. Like, what are they going to wait until next Tuesday, or just don't wait?
Right.
We'll apply.
Yeah,
We'll
like
cross the funds running out. We'll cross that bridge when we come to it.
Mm-hmm. Sure.
Alicia, I'd like to say one other thing. When we get past this, I think this is a good lesson in how important planning is. As a business person, planning means having reserve funds for X number of months of payroll. Planning means having a relationship with a bank so that you have a line of credit available from them in a time like this. Planning on the personal side means have a home equity line of credit so that you can tap the equity in your house when you have a personal situation where you might not be getting a salary for 2 to 3 months. That's the type of planning that in a crisis scenario right now, it's going to be really hard to do, and it's really easy to just put off when things are going well.
Yeah.
Planning is really important, and that's why you need to think about not just now in crisis, but after the crisis is over and things get back to normal. It's important to look at these types of concepts and figure out where was I short, where did I have an issue, and do I need help in terms of figuring out how to plan for the future.
Yep.
Right. Okay. Well, with that, we're out of time here. So thank you all so much for your time. Really appreciate it. Dee, Diana, John, and David, especially all that great real-time information. That was really incredible and awesome, and I think extremely helpful for people. So again, just as a reminder, everyone, I will send out a recording of this so you can look back at that. Again, check out our website, restonchamber.org. We've got a resources page where we'll also have the recording of this, just lots of information for small business, lots of links to the different elected officials and their town halls, things of that nature, and also our restaurants that are still open. Please also consider joining us for our next business success webinar. It's on Tuesday, April 7th, and it's on how to maintain wellness, physical, mental, and nutritional when it matters most during this time. So other than that, thank you all again so much for joining us, and just be well and stay safe. Thank you so much.
Bye-bye, everyone.